Hello, I'm Jason Donovan, founder of the Wealth Titans, and in today's episode, we're going to look at why it's not a good idea to rely upon analysts' estimates and reports when making investment decisions. Whether it's a newsletter or special report, analysts and gurus of all shapes and sizes have claimed to gain some inside scoop as to the future of the stock market, claiming that they have unlocked some sort of secret that allows them to predict the market. Thousands of people lose millions of dollars every year as a result of placing faith in these individuals. So to truly illustrate analysts' inability to predict or forecast the future with any real long-term success, let's look at some studies that have been done to evaluate their performance, and then we'll conclude with a better long-term solution. A study covered over 284 experts who made a cumulative total of 82,361 forecasts over several years. The study found that analysts showed little to no sign of consistent results over the testing period. It went on to conclude that the dismal results were the result of analysts making decisions based upon emotions and gut feelings rather than empirical evidence. Another study examined analysts' ability to make predictions both over 24 and 12-month periods. The average 24-month forecast error was around 94%, while the average 12-month forecast error showed improvement but was still only around 45%. So why is it that analysts can't seem to be any more accurate than any other human being like you or me? Because they are human as well. And analyst or not, we all suffer from the same human judgment errors. You see, as a species, we have an aversion to probabilistic strategies that accept the inevitability of error. In other words, even though the best thing to do is bet on a base rate, say accept an average return of 6 to 8%, and accept the fact that we won't be right 100% of the time, we reject long-term evidence that supports these kinds of investment systems in preference of short-term hunches, even though the probability of being right in the short term plummets. Now, there are analysts out there who can have a good month and sometimes even a good year, but eventually the luck runs out. And this is why it is so important to have an education and understanding of the stock market yourself, because at the end of the day, you will always be the best manager of your own money. Relying on newsletters and hot tips is not a recipe for success, but a recipe for disaster. And taking control doesn't require a lot of time or effort. It only takes a willingness to take responsibility for your own success. And using investment systems is by far the best way to profit from the markets. And having your own system makes you independent from analysts and experts, and you no longer have to rely on experts and strangers to grow and protect your assets. This gives you a tremendous amount of independence, as a full investment system works like a well-tuned factory, consistently putting your investments to work for you. And this is because a well-placed investment system will tell you exactly when to buy, sell, and hold ahead of time, so you can sit back calmly, panic-free, allowing your system to do all the work of protecting and growing your money for you. And this keeps you independent of analysts and strangers for your success. Thank you for watching. I hope you found this informative and actionable. If you have any questions, please let me know in the comment section below, and don't forget to hit the subscribe button and check out some of our other videos. To your investment success.